What's up, everyone? So the order competition rule that the SEC proposed a couple of weeks ago has been pushed through the Fed Register, and funny enough, this actually was pushed through over the holiday weekend, much like what we saw with the net stable funding ratio back in July of 2021. Some of the biggest capital banking requirement changes that we've seen in quite some time quietly pushed through over the holiday weekend. Same thing here with the order competition rule. Now, you may be asking, what does this rule mean? What does it infer? Well, we're actually going to use Chat GPT to help us look into this. And what I'm going to do, here's the actual filing here, is I've taken the introduction and I've copied it, pasted it over to Chat GPT. We're going to run it to see what summary we can get back from it. So let's go ahead and do that right now. Here's the text right here of the introduction. And underneath it, I have the comment with the hashtag summarize the text. And then I have an insert tab. Let's see what we get back. Did it just copy paste the same thing? Oh, okay, here it is. Okay, so the summary is the Commission is proposing a new rule, proposed Rule 615 of Regulation NMS, which stands for National Market System, entitled the Order Competition Rule. This rule would require certain orders of individual investors, you and me, to be exposed to competition in a fair and open auction format before such orders could be executed internally by trading centers that restrict order-by-order competition in order to benefit individual investors by giving them an opportunity to receive more favorable prices and to benefit investors generally by giving them an opportunity to interact directly with large volume of individual investor orders. Data analysis suggests that if individual investor orders are opened up to order-by-order competition, they will receive significantly better prices and other investors would have the opportunity to interact with the marketable orders of individual investors. Proposed Rule 615 have been designed to maximize the opportunity for a wide range of market participants to participate in auctions on terms that will promote the best possible prices for the orders of individual investors. Exceptions have been provided for orders with a market value of $200,000 or more and for orders with execution prices that are very favorable for individual investors. So basically, they're going to get better prices for retail investors. How long have they been saying this? I'll believe it when I see it. But that's the summary of the introduction. So now what I'm going to do is I'm going to go back to the rule filing. I'm going to delete all this. I'm going to refresh. Actually, I'm just going to do this. And I'm going to go back here to the filing, and we're going to go to the next section. So part 2 is the overview of market structure for national market security stocks. So let's go ahead and look at that. I'm going to copy this over and have it summarized for us. And we're going to see what it has to say. Pretty neat stuff, man. Technology. Pretty cool. Pretty cool. I'm going to do this page, and then we're going to probably stop there. So I don't know if it's going to be able to handle all this. Let's see what it has to say. Oh, too long. Okay, I'm going to go ahead and erase some of this. And we can do this in 2 parts. Okay, so this part here, let's keep going. You increase the length a little bit. And I can keep doing it too. It'll give me different orders depending on how many times I hit submit. So the text discussed the market structure for NMS stocks, focusing on the types of market participants, order types, and trading costs related. It began by describing the different investors, individuals that trade infrequently, and institutions that need to trade large sizes and limit information leakage by executing child orders gradually. It then goes on to describe the 5 different types of trading centers that execute trades in NMS stocks, which are national security exchanges, alternative trading systems, exchange market makers, wholesalers, and other broker-dealers. It then discusses order types and trading costs, such as the spread cost when using marketable orders and opportunity costs when using non-marketable orders. In a nutshell, this text offers an important view of the market structure for NMS stocks, particularly the types of market participants, order types, and trading costs. So now you know, if you want to learn about market structure for NMS stocks, order types, and trading costs, this would be a good filing for you to read because that is what it is going to be discussing specifically in the text. So how about them apples? Now, let's go and we'll do one more part and then I will let you go. But pretty cool stuff. Anyone can do this. They can, copy paste this into a machine now. It's going to learn it for you. Let's do the rest of the NMS summary here, and that'll be all. Okay, I'm even going to copy this table in just to see what it gives back. Okay, let's see what it has. And we're still in the NMS section here. So the summary of this is going to be, this text discusses the measures of order execution quality and trading costs in the context of proposed Rule 615. It provides 2 examples to illustrate how differences in the adverse selection costs of order flow routed to 2 different trading centers can result in disparities in realized spreads. In Section 3, it provides a statutory framework for an NMS according to Section 11A of the Securities Exchange Act and explains the Commission rules for handling and executing investor orders in NMS stocks. Now, if I hit submit again, it's going to give me another summary, but with different wording to it. So let's see what it does on round 2. The text discusses the Exchange Act framework for NMS market rules that the Commission has adopted over the years and examples of calculating measures of order execution quality and trading costs. These measures are used to reveal information about order execution quality and trading costs across different trading centers. An example of the exchange example and a wholesaler example helps illustrate the calculation methodology prescribed by Rule 605 of Regulation NMS. Additionally, an example illustrates the difference between an order being executed at the NBO with no NBO or NBBO price, which is National Best Bid and Offer, and an order being executed at the wholesaler with NBBO price improvement. Lastly, Section 3 of the text includes statutory framework for an NMS and underlines the 5 objectives of Congress and the objectives they have for the protection of investors and the maintenance of fair and orderly markets. Yippee-yi-yay. So any other interesting sections in here that we can look at? It's a 118-page document, so pretty long, but this definitely helps speed it up. Let's just do one more, the alternative trading system section here. I feel like that's going to be an interesting one. So alternative trading systems, or in other words, dark pools, basically, same thing. That's actually going to be a relatively small one. So let's just finish this one off. And we'll get a quick summary of this one. And what do we get? We get National Securities Exchange, or NSE, and NMS stock ATS must abide by proposed Rule 615 in order to operate a qualified auction for segmented orders. This rule requires NMS stock alternative trading systems to permit any registered broker or dealer to become a subscriber, subject to any written policies and procedures to prohibit or set conditions on certain subscribers. The rule also includes requirements to identify and mark segmented orders with the aim of providing competition for individual investor orders and offer them fair and open auctions. So basically, in a nutshell, what they're doing is they're supposedly going to give more competition for retail order flow, which is going to relate to better costs, better spreads, and open up a lot of different opportunities for some other participants in the market. They've been saying this shit for 2 decades. I'll believe it when I see it. But other than that, as far as the group's concerned today, not much bullseyes today. We have two so far. None of them are over 80%. So just be patient. The market's a choppy little bitch today. So sure, we'll get some alerts in at some point today. I'm just holding out for that 80% or more because I like to win. So anyways, y'all have a good one. I hope you have a good rest of your day, and let's go.